Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here is the Chief Executive Officer of Treasury Consulting LLP. And today we would be covering a dedicated video which would be on MIFOR, which is Mumbai Interbank Forward Offer Rate. We already have few videos on MIFOR, but the purpose of this video is little bit different. Here we would be covering whether we should go for dollar swaps or reverse dollar swaps, and the topic is the liability in corporate books, in corporate bonds, right? Corporate books basically. Now the purpose of the video is I hope we read that article which has been published in the Financial Express last week. We suggested that in the last 18 months, approximately 17 times the ratio of the downgrades to upgrades is greater than 1. It means the more downgrade had happened vis-a-vis the upgrade. And the clear reason is the debt profile of the Indian corporates. One side, the government keeps claiming that they are getting a GDP of 7.6%. There are a lot of articles which are coming in the public domain which suggest that this is an overestimated numbers. And other side, the ratio of the downgrade to upgrade is greater than 1, that to 17 times in the last 18 months. Now this is because of the debt profile, and majority of the companies in India, corporates in India, have a debt profile of, it's a foreign debt profile. And when we are talking about a foreign debt profile, they have a dollar denominated debt profile, which is in the form of ECB, which is external commercial borrowing. Yes, there are some corporates who have FCNR also, but here the count is very minimal, very minimal, not a high count, to be honest. Now assuming that here we are taking any company. Now taking an example like TCS. Assuming TCS is having $2 billion of a funding, which they are paying at LIBOR plus 250 basis point, right? And assuming they took for 10 years, right? Now Tata Consulting Services is a software company. We know how the situation is currently going for Indian IT industry. They are also all set for huge amount of pink slips, all set for that. So we are here assuming that TCS is going for a $2 billion. They already have a $2 billion of funding in the book, which is at L plus 250 basis point, and it is for 10 years. Now in this, the biggest question for them is how to hedge that. Whether we should keep this open or we should hedge that. Now we have taken some data from Thomson Reuters, and data is as follows. MIFOR is Mumbai Interbank Forward Offer Rate. Basically it is nothing but IRS, interest rate swap. MIFOR is nothing but INR IRS, and the formula for MIFOR, which is Mumbai Interbank Forward Offer Rate, is 1 plus LIBOR of that period into 1 plus swap rate, swap annualized premiums, collectively into 365/N. This is the formula for the MIFOR. This is what we are calculating. Now the data from Reuters is that 2 years MIFOR is 6.2. Bid and ask. Let me explain you what do you mean by bid and ask also. MIFOR bid means corporate asset, bank liability. But this is not the case with majority of the companies in India. So you are ending up MIFOR here, which is corporate liability and bank assets, which is here, right? Now 2-year MIFOR is 6.35. 3-year is 6.55, 4-year is 6.7, 5-year is 6.9, and 7-year is 7.1, and 10-year is 7. All those people who tend to claim that after demonetization the interest rate in India would fall and it will move towards a invert curve, these all are wrong. We are saying from the effective 8th November that the demonetization will have no impact on the MIFOR, and that we can see here. The curve is nowhere invert as of now. And if you go to the longer end curve, although it is already a longer end curve, but if you go to the more longer end curve like 15-year curve, 20-year curve, although such long curves are not required, but assuming till 20 years curve, you will make a sense that it is again not invert. It is again not invert. It can maximum be flat. Now the point of contention is, if I am a corporate treasurer, I know that I have a liability of $2 billion, which is LIBOR plus 250 basis point, and that is for 10 years. So what I would do? I would love to swap that. Because there is a reason to it. As I already told you, MIFOR is LIBOR into 1 plus swap annualized premium. If you look at the INR swaps means INR premium, that 3-month exporter premium, this is bid. Now this is exporter premium, and this is importer premium. So 3 months premium is 0.70 rupees. It means 70 paisa. 6 months premium is 1 rupee 48 paisa, and 1 year premium is 3 rupee 5 paisa. Flat 3 rupees we can take. Now let us take the LIBOR. LIBOR is inching up. 3 month LIBOR is 1.12, 6 month LIBOR is 1.13, and 1 year LIBOR is 1.81. There was a time when this 3 month LIBOR was 0.65, 6 months was roughly 0.84 something, and 1 year I remember it was 1.25%. And I still remember that there was a time when 1 year LIBOR was 0.90. Today it is approximately double than that, because the dollar strength is going on. Trump has asked for the $1 trillion of the investment funding. The dollar index is again back to 102. All dollar directs, which is dollar to JPY, dollar to INR, all set to move up, especially JPY, which again backs at 104. And we are planning a technical video on JPY. Now the purpose is, if I am a corporate treasurer and I have these data in my hands, I will surely not going to keep it unhedged in any consideration. Surely not going to get it unhedged. I am going to hedge that. Plus, if I am a corporate treasurer who do not have a funding in the books as of now, but would like to have a funding in the books in the near term, you're not sure, could be 6 months, could be 1 year, could be 1.5 years, and could be like that. In that sense, I would be going ahead with which is FRA, which is forward rate agreement. I would go ahead with FRA so that I am able to hedge that. If the interest rate would go up, then of course I will get a compensation. If interest rate will move down, I will pay something, right? Or if I am a very aggressive corporate treasurer, I would have gone up by interest rate options, which is buy put and sell call. Or if I am a very aggressive, I would have gone for swaptions, which could be call swaptions, which could be put swaption, that depend upon the corporate liability of that particular corporate, that depend on the liability of the particular corporate. So in nutshell, the purpose of the video is to let you know that considering the current data on the MIFOR, which is not invert, anyways it is not invert, currently the premiums, which is not falling, which is static, and currently the LIBOR rates, which every day is inching up, it is a right time for us to hedge our liability, because very soon the LIBOR rates would inch up. If you look at the Bloomberg TV, you would get to know that there is a 98% probability, my mistake, 100%, because yesterday Bloomberg suggested that there is a 100% probability that they are going to increase the rates this time. And my dear friend, if this would happen, and this would surely happen because Trump is highly upbeat on the US economy, if this would happen, then these all will move up. And if these all will move up, your MIFOR curve will move up. And the so-called claims that the demonetization will invert the curve and so on and so forth, this won't happen. Interest rate will all set to move up. So I would request you, if any corporate treasurer or any advisor is listening, that you should hedge your uncovered exposure as early as possible. And the best way of hedging is the complete swap, which is principal only swap, coupon only swap, and cross currency, which is, if you add total, then this is cross currency interest rate swap. If you have any problem, you can contact us at rahul.magan@treasuryconsulting.in, and my mobile number is very well known to everybody out, 9899242978. At the same time, before winding up the video, we would like to give you a very good news that we are launching a fixed income platform across the globe. This platform would be much better than you have currently, which is value research insight and money control. We would be keeping everything in this platform. This platform would be divided into three parts. One which is free for everybody, one which is educational portal, and one which we are keeping only for the corporates, those who have a restricted access of that, those who subscribe for that, right? This portal would be covering the fixed income market of everything. It would be covering, about everything we have under fixed income market, which would be Singaporean fixed income market and fixed income market of all offshore centers. And we are expecting this portal, the first glimpse of that portal, by December 2017. And it would be finalized by March 2018, because this is certainly going to take a 1 year from us. And after that, we will go for an app. We are also very pleased to share that effective 31st March, we are launching our second magazine, which is the Fraudster. This magazine would be the first magazine in India which would be covering the frauds, the analytics, business continuity planning, and lot of that stuff. So this magazine is all set, and hopefully with the launch of our fixed income portal, we would be launching the second magazine in India which would be covering the mutual funds. Hey, thank you very much, and we wish you all the best. Have a wonderful time ahead.